Hello and welcome everyone to this very important video where we will look into the real reasons why the stock market is crashing and who benefits from it and why that specific person is Donald Trump. So I just posted a little update here on X and I want to share this with you so we can together take a look at exactly what the idea here is. And it's not just an idea. It's a little bit of a conspiracy and a 4D chess theory I have here on macro, the markets, on Trump. But a lot of this conspiracy theory is not a conspiracy theory, but simple, plain facts. So let's take a look at that. What we see is that the current Trump chaos is pretty much a main driver for the stock market crash, right? We have all these weird debates about the tariffs, about Mexico, about Canada, a very aggressive stance towards Europe and towards China with tariffs. All of that destabilizes the market a little bit, and people are very nervous. On top of that, we also see that Doge, creates a regimen of austerity in the United States, which also contracts the economy by taking out laborers, by laying off a lot of people, and so on and so forth. Now, some people say this is political strategy of Trump. He knows he needs to create austerity and basically has a deleveraging cycle where we take off some debt from that crazy situation the United States is in to make it more sustainable. And he prefers to have the damage politically in the beginning and economically. But that's not the real reason here. There is a much, much more interesting reason why I think Trump has nothing against a little stock market crash right now. Why, in fact, he's going to make a lot of money with it. And what I mean with that, I will elaborate on in a second. So what we actually see is that in 2025, this year, there is a huge expiration and maturity of US debt. So the United States, as a country, has roughly $30 trillion in debt. And of that 30 trillion, these bonds, the Treasury bills that the United States sells to investors to raise that money, a lot of them are expiring this year. The reason for that is the pandemic and all kinds of things. So both short-term and mid-term and long-term bonds are expiring at a higher rate this year. And if you ask Grok, for example, and look at the debt structure, you see that, of the roughly 35 trillion, by the way, not 30, 35 trillion of US national debt, between 7 and 9.2 trillion expire this year. This is a huge number. So nearly a third, let's say 25% of the entire national debt of the United States needs to be refinanced, because that happens when you have to, refinance debt. The debt matures. And of course, because we are broke, you have to issue the same debt. It's kind of credit card. You have to pay your credit card. You take another credit card to pay that credit card. That's called governance in the United States, right? So you are basically financing the expiration of old debt with new debt. That's totally normal. It's not good, but it's normal. And this year, up to 9 trillion need to be refinanced. Okay, now, how does this work? There's the Treasury Department, and that Treasury Department issues these treasuries. It's called an auction. So basically, this dude who's in charge, installed by Trump, says, okay, I have $1 trillion in new debt. Once anyone wants to buy this stuff, and he puts certain maturities on it. So whole strategy, some are 10-year, some are 3-year, some are 12 months, some are 6 months. So we have a whole, laddered approach to these treasury bills. And then you sell these treasury bills. And the big question is, if you buy $1 trillion of treasury bills from me, what is the interest rate I have to pay you in order for you to buy that $1 trillion from me? That's the auction. Now, that's very interesting, right? Because what if you are willing to buy that from me for 4.5%, but I'm not willing to pay it to you? Well, then you don't buy it, right? I cannot sell my debt. I cannot raise that money. I cannot refinance the old debt. So that is kind of the marketplace for treasury bills, is that the one who issues these bills needs to hit the interest rate that is sufficient for the market to eat up the entire offering. And that's called the market, right? So it's the price of these bills is the interest rate. And of course, if you're Trump, And Trump is known for that. He mentioned that in the past. He in his first term, he wanted to do a very smart refinancing deal, and then for a complicated reason that didn't happen. So these refinancing deals are very important, because imagine you have, let's say, $5 trillion you're going to refinance, just for simple math reasons. Or let's say 10 trillion to make it even easier. 10 trillion. And if you sell this debt for, let's say, 5%, right, on $10 trillion, you're going to pay a lot of money per year in interest for those $500 billion on 10 trillion. So that's a lot of interest. Every single year, you have to pay $500 billion in interest for that 10 trillion you issued for refinancing. Now imagine you could lower that interest rate to 4%. You would save $100 billion per year. And so in this calculation here, just think about 100 billion a year. You do this for 3 years, you're saving $300 billion in interest payments. And if you look at what Elon tries to achieve with Doge and what typical savings are, the US 8 scandal, where they're saving 40 billion, this giant scandal and dismantlement of these tens of thousands of like fraud and abuse spendings, we're talking about 40 billion. This giant effort leads to $40 billion in savings maybe per year. Here we are talking about 300 billion in savings, just with 1% decreased interest rate. Okay, so you understand that this huge debt refinancing is a very, very big deal for the United States and for Trump, who is a deal maker and who wants not to pay money, especially for literally nothing for interest. How is this all connected? Well, I want to show you another chart. Look at this. What you see here is the S&P correlated with 10-year Treasury yields once it loads. So the interesting thing is that you will see that the stock market and the bond market are actually related. The higher the stock market goes, the higher the yields go. And let me explain why. So first of all, the Treasury bills, right? They are competing with other bonds. The bond market, this whole thing is the bond market. They compete with corporate bonds and so on and so forth. And there are these two big markets to simplify it. There's the stock market and there's the bond market. And people with money, the hundreds of trillions in capital in the world, they always need to be invested, because no one wants to be in cash, because then you make nothing and you lose money by inflation. So, but you have to decide, do I put my money into bonds or into stocks? If you put it into stocks, you cannot put it into bonds. And if you don't put it into bonds because you put it into stocks, the yields go up. Why? Think about the auction I just explained. And think about the supply. I'm offering this $10 trillion, but no one wants to buy them because they're all invested in stocks, because they all believe the stock market is going to make them so much money, so there's no money. What do you have to do? You have to increase the interest rate to attract more people. So I have all my money in stocks. You offer me a treasury bill, $1 trillion in treasury bills, let's say for 3%. I say, no, thank you. I'm not going to buy any of these. And you say, well, what about 4%? I say, no, thank you. What about 5%? And I say, okay, fine. 5% for no risk. Okay, I sell a bunch of my stocks and buy your treasury bill. So that's how it works. And that means if the stock market goes up, if people want to buy these stocks like crazy, they don't want to buy your bills in these auctions, and you need to increase the price. But what happens if there's a stock market crash? What happens if Trump scares everyone so much that they are starting to sell their stocks? What happens if Trump becomes erratic about his weirdo, tariff negotiations, where he says, oh, tariffs on, tariffs off, tariffs on? It creates uncertainty in the stock market, and the stock market doesn't know, it doesn't like it. Because if you buy auto stocks and you don't know what the price of these autos will be, and you don't know what the demand will be, and you don't know what the profits will be, you just sell the stuff. It's like, leave me alone with autos. I first wait until this tariff stuff is settled. Same is true for all the other tariffs. As threatening retaliation, they're going to pull oil and stuff off the market, and then oil goes through the roof, and then everything gets distorted. So stock market investors right now are scared. They're pulling out the money of the stock market. What are they going to do? They're going to buy bonds. What is it going to do? Lower the interest rate. And that's exactly what you see here. Look at the 6 months and look at the height, the bonds yields, right? The bond yields were 4.8% on 10-year treasury bonds. And that was Tuesday, 14th of January, 6 days before inauguration. Guess what happens now? The stock market crashed because of these Trump exercises, and the yield is now down to 4.16%. Wow, that's a lot, right? So we basically saved already roughly 64 points. That's a lot on $10 trillion, 64 points. That is $64 billion in less interest per year. So to make the calculation easy, let's assume 5 years here, right? And let's assume Trump's actually going to save $40 billion a year, on, let's say, $5 trillion in debt that he refinances, just to make the math simple. That means within 5 years, just by doing this little exercise right now, Trump is going to save $200 billion. That's a lot of money in pure interest payments for nothing, right? That is why I said in the thumbnail, Trump is going to make $200 billion just with this little exercise. By the way, what I'm saying here is not a conspiracy theory. What I'm saying is pure fact. There's no one out there who knows anything about economics who would doubt what I just said. The conspiracy theory is that Trump does it on purpose. But that's not a far leap. If you were Trump and you say, I give you $200 billion over 5 years for free, all you need to do is create a little chaos with your tariffs and some other things and promote Doge. But if you don't do it, you don't get the money. Well, and you want to do it anyway, would you do it or not? Of course you would do it. So what does this all mean? Well, I think it means it's very likely that Trump has nothing against some turmoil in the markets. And he already said that. Why? Because he wants to refinance the debt, and he will do it. By the way, we have some more timing insights if you ask Grok about these things, when these refinancings happen. The majority will happen before June or by June, in the first half of this year. You can also pull forward some of the refinancing. So as a rough estimate, I think $5 trillion in debt will be refinanced by June. And that's very interesting because that gives us some hints on timing. Because we know Trump does not like stock market crashes. He hates it. But my assumption here is he sees the benefit of doing this, and he will conclude that probably by mid of the year. And then we will see a huge boom in the stock market because suddenly, surprise, Trump's policies will look more calm. The tariff chaos is over. Tesla, by the way, is going to go through the roof if they launch Robotaxi. So there you have it. I think that is the real reason why financial markets are in turmoil and why everyone is wondering why Trump is not doing anything and why he's not calming down the markets instead of making it worse. My prediction is he's going to continue to making it worse because he's going to get $200 billion for free. Now, what does it mean for us? Here at the Reality Engineering Group, right? We are the world's leading group of trading Tesla because we believe it's the eye of the storm of the AI singularity and robot revolution that we are in the middle of already, that will create unprecedented value and that will be captured by companies like Tesla or Tesla before everyone else right now, as it looks like. And understanding these macro situations is very important because we know Tesla dropped like crazy together with the other stocks. The question is what's going to happen. We know Robotaxi is going to come probably mid of the year. And we also have to watch out for the markets. And my prediction right now is that this logic here explains why the markets look so bad and why Trump is not doing anything. And it also gives us a timing when this is likely going to stop. I think in the second half of this year, we will see a reversal and we will see markets going up significantly. And Trump this time is going to support it. I think the Fed is also going to play an important role because with this turmoil and probably some hits economically, the probability of lower rates goes up, which is also good for debt refinancing, but it's also good for markets. There you have my real reason why the markets are crashing, why Trump wants it, why he gets paid for it, and when it's likely going to stop and providing us with a huge opportunity. Check out the description for the group. If you're a Tesla shareholder, join us. We are doing pretty awesome stuff and making sure everyone can generate this alpha we're all looking for. Stay safe out there in the markets. Always use your brain and gather more intel. Follow me and subscribe to the channel, and see you very soon.